Hey, welcome to the closing beat, everybody. How we doing today? Oh, it's over there. Hope you're having a good day. Running last minute here, so we are ready. I'm prepared. Don't worry, I'm with you. Hope you're having a great day out there. And also, if you're a client tonight, Wine and Wealth. That's what I was working on. Actually, was our class for tonight. We are going to talk about, and I'm going to show the data behind your withdrawal rate. Let's just put this to rest. What's the data? Let's go over some examples. We're going to talk about that, show you some different ways to go about it, and then we're going to go into the volatility, because the reason the 4% withdrawal rate is so focused on, I'll tease you here, whether it's the right way or not, is because your portfolio is doing this, right? And so you still got to withdraw. So we're going to go through the impact of volatility and why I focus so much on that. And of course, I've got some really geeky data to share with you, but in a really simple, easy way. We are financial advisors here at Jazz Wealth. Just like to have a little fun while we're growing your dough. We are also one of the only financial advisors that literally, if we want to make more money, you have to make more money. It doesn't go the other way, right? We're not charging you just for doing nothing around here. So I really love that, because it keeps our focus on your best interests, and there's literally nothing that can get in the way. Fully transparent and all that good stuff. Jazzwealth.com/2023. If you want some free numbers there, I'll bring that up in a little bit for you. And I'm told we have some Guess the Dow leaderboards. What happens if I hit this button? Oh. There's Cody. Yeah,
I'm here.
There is
a lot of chop on the stream. It seems like somebody should do something about that.
Okay.
But yeah, there's your leaderboard. How fancy is that? Is that a pretty good looking leaderboard or what?
Classy.
Looks good. Ram Kuma is in first. That's just my guess on how to pronounce that. Not really sure. But 3 out of 5 on the board today are clients. Obviously not final until the end of the day tomorrow. But yeah, always good to see a few clients on the board there.
Nice. Okay. That is cool. I like it. And also, so tomorrow's a deciding?
Tomorrow, yeah, 4 o'clock. And yeah, that's it. But you can get your guesses in for next week up until 4 tomorrow.
Yes.
So if you want to play next week, get your guess in then.
Nice. Okay. I love it. Cool little leaderboard there. Yeah, over time, we get this little thing looking sweet and fresh there. I like it. Hey, 2023, jazzwealth.com/2023. There's a free sheet. You can have it, no strings attached. Haley's been sending them out like crazy. So just know that she's not making a list, and she's not going to hunt you down for anything or try to sell you anything. She'll just send you the list. I believe she even sends out a free class too. One of our Wine and Wealths. That's it. We literally won't bug you for anything. So I hope you enjoy that one there. If you want to play Guess the Dow, jazzwealth.com/Guess the Dow, $100 gift card to the winner, or $100 credit to your account if you're a client, whatever you like there. As far as the S&P goes, there's a change. So I'm gone for the day, and the S&P actually has a good day. So there you go. We broke the trend there. Yesterday, by the way, was more of a broad index, really boring type rally, which is great. We don't want to see, oh, it was Microsoft and Salesforce, they drove the market higher. No, this was all together. If you look around, every sector was in the green. 9 sectors, I can count them on 2 hands. 9 sectors were up more than 1%. So very, very good rally day yesterday. If you were hoping for today to be one of those snoozer type green days as well. It's perfect. Everything, I can't complain as far as that goes. Stock-wise, you had Lululemon followed up with PVH's earnings, where they said, you guys are out there paying top dollar for their clothes. Everything went well. Their holiday season went really well. It was kind of a fascinating earnings report to read. They killed it. The stock actually obviously was higher on the day. Shoppers are still out there in force. They easily beat on the holiday shopping numbers there. And their guidance was the focus, where they said the shopper action in our stores still red hot. So, I hear that stuff's expensive too. I've never actually bought that. Are you a Lululemon guy, Cody?
Oh, no.
That's girls, right?
I think they make guys. I don't think they make athletic wear.
Oh, yeah. Okay.
I just not from
pricey though, right?
I think it's expensive.
That's
yeah.
Pricey.
Yeah.
Okay. Well, athleisure, as they say. Anyways, I do want to point out also that Micron, very good. We brought this up the other day. Their main focus was on client inventory. So they were commenting that their clients' inventory is finally getting back to normal, which is good news, not just for them, but good news for the industry. And so if you were around yesterday, you happened to be watching the semis there, great day. Today continues with a great day. One of the best industries in the market right now. If you happen to have a piece of that, you're going to be pretty happy. If you have a piece of none of this stuff, where do you go? Think about, this is a bit broad here. Now think about this. If the economy stays flat or maybe goes down a little bit, gets a little bit weaker, what's that good for? What stocks would you look at? You would look at the growth stocks, right? Because interest rates likely would come down. That's good for growth stocks, whether they have a high margin, low margin, whatever. You can get a little more specific if you want to think like a fund manager here and say, what if the economy doesn't do or does really well and starts to recover? The real yield would be higher. And so therefore, those big growth stocks, like growth at any cost, I think is what they call them, where they have very low margins and they just grow. They're putting all their money back into their business. They would not do as well. What would do well is growth stocks with high margins. So that's where you'd want to look. And it's kind of playing the best of both sides there, because if the economy gets a little weaker, growth stocks as a whole will still do well. Growth stocks with high margins, growth stocks with low margins. However, if the economy gets better, which a lot of people say, well, looks like we're kind of, maybe at the tail end of this thing, hopefully, we'll see. So if that's what you believe, then you say, well, I want the high margin, high growth stocks. That's where all the action will be there. And in an example, I'm not telling you to buy this stock. I'm just give you an example because I looked up a few here. So for example, Take-Two. Take-Two, we've got the sort of, what do they call it? Consensus analyst growth at 25%. Okay, so that's a growth stock there. Margins of 17%. High growth, high margins. So that's the type of company that you would look at if you had that belief. Something like a Duolingo. Now this is going to be hard because you see it's going nuts here. 24% growth expected for 2023, but on no margin. Like they're not going to make any money. Zero. So that is one of those where you say, well, if we expect the economy is going to get a little bit get a little bit worse or get a little bit better, then I don't know that I want to be in that. That may also have had a pretty fair run there in the short term there. So think about it that way. You want to go look at your list, small cap, mid cap, whatever it is that you're into. We want high growth, high margin just to be safe. That's how you would want to build your portfolio around this here. So let's take a look around the markets here. You got the NASDAQ up 100 and some points for the day, 117 points. That's going to be the leader. And of course, most of that leadership comes in the fact that the tech sector was the second best performing sector for the day. These are the tech stocks and your semiconductor stocks. That's the theme. That's where everybody's at. It's not hard to guess where all the money's going at the moment. People like semiconductors, analog devices there. You got Intel, Qualcomm, AMD, Texas Instruments. Actually, Micron was the only one that didn't participate today. A little bit of a break from yesterday's big pop. So that's where the action is. And then, of course, the big tech stocks, including Amazon, Tesla, Meta, Netflix, all of those as well. Now, we have earnings season coming up, right? Yeah. So we have earnings season coming up. It feels like we're setting up for a rally here. Or it feels like analysts are setting the bar really low to make it easy for companies to look like they're doing better than expected. That's one of those, up on hot air kind of rallies that you could see. So it's a very tricky one to look at, but estimates for individual companies are coming down almost as fast as they ever have in history. COVID was the fastest, right? So many companies or many analysts are looking at companies saying, we're going to cut our guidance. We were expecting you to do this. We're going to go ahead and do this. The problem is they're not just lowering it a little bit. They're saying, we were expecting this. Just make a penny. Can you do that? So the bar is so low that as we come into earnings season, you're going to have companies go, we didn't do great, but we beat what you guys were expecting by a penny, right? Or by hopefully more than that, but you get what they're saying there. So we have a basic estimate here for the S&P for 1.4% earnings growth per share, right? If you want to look at it that way, to come out for the first quarter. Tomorrow's the end of the first quarter there. Just, 6 months ago, yeah, the beginning of the fourth quarter, 6 months. Now it's 6 months. Just 6 months ago, we were expecting first quarter growth of 9.9%. So analysts said, we want you to grow at 9.9%. And now all of a sudden, for the entire S&P, or if we take all the stocks and put them together, you go 1.4%. What a gap. What a huge gap there. So in my mind, they're setting you up for they beat on earnings. That must be good news. Oh, that company beat on earnings. That must be good news. Now, the banks will be the focus. By far, that's everybody in earnings season. This is going to focus on the banks. The good news is they come really early in earnings season, so we're going to find out really soon. Anyways, just wanted to point that out because as we get closer, we're going to talk more and more about that if this continues. Remember, this happened during COVID. This happened the quarter after COVID. This happened in 2018. This happened in 2015. This, of course, happened in 2006, 7, and 8. And so when we lower those expectations, look back at what the markets did. It wasn't great. Companies weren't beating earnings by a mile, but they beat by expectations. That's what gets picked up on TV. They beat by 10 cents. Oh my God, I didn't expect it. Really? That's less than what they previously expected, though. So it's not a conspiracy, but it's a little bit of a trick that is being played there. And I think that's what we're setting up for. Anyways, like I said, we got some great classes, Wine and Wealth coming up. We've had some great classes. We've talked about covered calls, return on capital, all kinds of cool things that revolve around your dough. Tonight, we're going to go real specific into withdrawal strategies, 4, 5, 6% withdrawal rates to kind of see what that looks like visually. And then we're going to take it a step further and say, what if your portfolio was on the efficient frontier? I'll explain what that means. That is modern portfolio theory. It's something that we follow here as well. Efficient, if we look at the efficient frontier or the curve of returns versus volatility, we're going to plot your portfolio in a couple different spots to show you how even at a 4% withdrawal rate, if you're taking more risk or more volatility than you need to, that actually hurts you and you're not getting any more returns. So we'll play around with that a little bit if you like to. Well, you don't really get a choice actually, because that's what I'm going to be talking about. 8 o'clock for clients that's in the dojo. Should all be set up in there and ready to go. All right, let's do some stocks in the news, huh? Roku, and actually every stock that said this today did the same thing. I don't know why, but Roku was one of the first to say, we're going to slow things down. We are going to cut some of our employees, fire people, they say cut your workforce, fancy way of saying you fired. They're going to cut it by 6%, but the stock didn't go up. It went down. That hadn't happened to any other stock. They said, oh, Meta, going to cut our workforce a little bit. Stock goes up. That did not help Roku. That was unfortunate. The same thing happened to Lending Tree. They said, we're going to cut our workforce by 13%. Stock didn't go up. It went down. So new flavor in the water, apparently. Madison Square Garden, I don't follow this closely. They're going to spin off their businesses, one of their businesses. Madison Square Garden's, live, or whatever they call it, shows that they have. So they're going to dissect that. The theory there is, by the way, live performances generate more fees. Those ticket fees that are up for debate right now. So that is the assumption by Wall Street. Like it or not, it's the assumption that things are going to go well for them. H.B. Fuller, if you take a look at this one, this had earnings today. It was okay. I just find it fascinating. This is in a perfect algorithmic downtrend here. There is no fighting that downtrend until it's broken, which means when it's broken, selling pressure comes up off of you. So I thought it was more of a cool watch list stock that happened to report earnings. And lastly, Bed Bath & Beyond. What was that, 26% today? Doesn't seem like a lot because you're only looking at 21 cents to the downside, but loses 26%. They're going to have to sell another $300 million in stock, and they did something different here. Instead of saying, like most of the time they say, we need to sell $300 million worth of stock, that's going to help us get back on our feet. These guys took a different approach. They're completely honest with you. They said, we need to sell another $300 million in stock, but we could still go bankrupt. Yeah. That make you feel good? Oh, sure. Yeah, I'll buy those shares. You going to go bankrupt? Yeah, okay. Let's invest in a company that may go bankrupt. So careful there. Very careful there. None of the short squeeze players. That thing is done. That's over with as far as playing that GameStop and AMC type thing that you were going to do. Jazz After Dark tonight. If you're around at 7 o'clock tonight, we'll be going up. We are going to talk about the recession odds on every single inversion. So we're going to compare every way that you can pair a bond, the 20-year versus the 30-year, the 10-year versus the 2-year, the 3-month versus the 30-year. We're going to compare all of them and show you how often the market the economy went into a recession within 2 years. The odds will freaking blow you away, and I promise you the data is accurate. So tonight, if you're not a client, don't want to come to Wine and Wealth, that'll be tonight at 7 o'clock. Just checking, and we are official. That is happening there. And then the next one that we're going to do is all of you that are like, I'm going to go buy gold. The commercials for gold IRAs are out there like crazy. I'm going to show you how you're way too late. We're going to show you every other time in history so you can see you are literally just chasing emotion, pure emotion, which is fair. These things happen, but we're going to cover it, make you feel bad a little bit by showing you the data. All right. I'll take your questions now if I can answer your questions. Otherwise, I'm going to get out of here, get ready for our Wine and Wealth, Jazz After Dark, and all the extra evening work that we do here. Yeah. All right. So to answer the dollar question, it's weakening, not disappearing dollar. Oh, someone maybe had a question. Okay. Blessed says, hey, Jazz, I have a question regarding the wash sale. I get a lot of questions about the wash sale. On first come, first out setup, so you're saying you have dictated or just accepted it by default, FIFO, as your approach there. Can you day trade on your losers and tax loss harvesting? Can you day trade on your, what are you saying? Meaning you have a core position and you're still going to day trade them? No. If I understood your question correctly. By the way, look at this thing. Look at what Doug brought by. Huh? Found this, found it at some sale or something. And, boop. That's so cool. The old Jazz truck, man. I love it. Going up on the wall. Yeah, Square's a news-driven stock right now, so careful there. I know the news tends to attract volatility, of course, as it should, and it tends to attract people these days. But you were down 16% last week, just to be clear. You're not still down week over week at the same level there. Personally, I don't see a reason to believe that you hit the bottom somehow, so I'd be super cautious on that one. Yeah. Do you think the rally is from rebalancing and buying at quarter end? Oh, you're not referring to the changes in the S&P. So no, it's definitely not due to that. I didn't see any indication today where losers were sold off and winners were bought. It was a very clear, besides banks, pretty much straight across the board rally. So I wouldn't say that. Tomorrow could be a different story, but yeah, I wouldn't say that. Thank you. I think it's a sweet truck as well. Beverly Hillbillies? What are you talking about? All right, yeah, maybe. That's classic, man. It's a good-looking truck. That's because of the logo. If the logo wasn't there. Meta, you're not sure where it's headed. Tell me what you got, though. Like, when you say that, imagine I'm a computer. Where is it headed tomorrow? Where is it headed in 6 months? You can't. My opinion is you don't want to fight that trend on Meta right now because they have responded to Wall Street saying, stop it with this metaverse stuff. Just hold tight. Don't spend all that money. Get over here and make money where you're used to making money. And Meta said, okay, we understand. Wall Street rewarded them, so they're going to stay with that. Yeah. If there was a Nerf gun war in the office, who would win? Who did win the Nerf gun war? Do you remember? We did a video on that. You can actually, on our channel, me and Cody played a little Nerf gun.
I probably won. If just taking a guess, yeah, I probably won. So
I disagree. So we may have to.
That's just like your opinion, man.
We have to do that again. You got 150 shares of stock. Oh, just a stock. Okay, any stock. Okay. You sell 50 shares at a loss. Then you buy 50 more shares within 30 days. Then to sell all 150 of them at a loss. So you got 150 shares of stock. Did you buy them all at the same time? And we're assuming that they have a loss, first of all. So 150 shares of stock, they went down. You chose to sell 50 of them, right? So you still have 100 shares of stock that are down. You then chose to come back and buy 50 more shares. So that loss that you just took, if it's within 30 days, you washed off that loss. However, the other shares are still separate, right? Put those aside. However, you didn't give up the loss forever. You add that loss to your cost basis when you buy the 50 shares back. It should be done automatically for you, but a lot of people mistake that as if I buy the stock back, let's say I had a $1,000 loss and I buy the shares back, yes, you do wash away the $1,000 loss on your tax form. However, the $1,000 loss gets added to where you bought. In other words, when you buy the shares back, it has to gain $1,001 before you'll owe tax on that $1. So hopefully that was what you meant to ask, and I got that correct. Yeah. You think you test the October lows in the next 1 year? Right now, I would say no. I would say no. There you go. Perfect. A couple more and we'll wrap it up here. Dustin, small caps usually lead in a new bull market since the Russell is trailing the index. Is that worrying? That's a good question. If they normally lead, and they're not, are we starting a new bull market? So from a research perspective, you'd have to say, how many times, I have to think about how I would phrase that so that I could pull the data, but is there ever a false alarm? And at what point would you determine the false alarm? I like that study, so I will look into that, but I don't know the answer at the moment. I would rely on the data for that one. And you don't trust them. They're going to go back to the metaverse. Don't worry. Things get good again, they're going to go back to the metaverse. They're not stopping that. It was just the fact that they were going to spend literally tens of billions of dollars, almost $100 billion on this, and what they had to show for it wasn't all that impressive. Keith, how was Sun and Fun? It was awesome, man. Actually saw some clients out there, got to hang out. It was kind of a beautiful day, so it wasn't too hot. Usually it's blistering hot this time of year, but it wasn't too bad. I did enjoy myself. Found that every plane that I would buy, I couldn't get insurance on. I'd probably kill myself anyways. So I found that I probably got just a little bit more hours to go before I can step up there past like a Cirrus. You share the answer on a closing beat. You give me till Monday to do that? That's the deadline? I can't do it this weekend. Normally I would say, yes, I'll do it over the weekend. I will be out of town this weekend, but when I do it, absolutely. Yeah, that's not, you asked the question here, I'll certainly answer it here. Absolutely. Okay, Jazz After Dark tonight. Recession odds after yield inversions. If you want to know the geeky data and sound smooth in front of your friends, that'll be that. If you are a client and you want to come to Wine and Wealth tonight, something we've never covered before and in this much detail, we'll talk about the efficient frontier and all that good stuff. Gonna have some fun with that one, so don't let me scare you. And that'll be at 8 o'clock in the dojo. And that's all I got. All right, you guys enjoy the rest of your evening, and maybe we'll see you later. Adios.